In this chapter, we're joined by Mambu's VP of Marketing, Laurel Wolfe, to discuss next-gen fintech, success at scale. Laurel, over to you.
Thanks, everyone, for tuning in. Today, we're going to talk about next-generation fintech success at scale. And joining me today is Simon Hardie. He is from Findexable. Simon, thank you for joining us. If you could just give me a little intro about yourself, Findexable, and your Global Fintech Index, please.
Yes, of course. Thanks, Laurel. Great to see you, and thanks for having us here. Findexable was created about 2 years ago, both to map fintech ecosystems globally and also score fintech companies, both for investors but also institutional buyers of financial technology. We've been, as I say, we've been going about 2 years, and we run an annual rankings which looks at what's happening in the world of fintech ecosystems globally. And we'll talk a little bit, hopefully, this morning about some of those findings from our second global rankings this year. My background, I'm a publisher, editor from the financial services world by background, and it's great to be here and to share some of the insights and some of the things that we're seeing in the fintech landscape, not just from the perspective of scaling fintech firms, but also the marketplace as a whole, and where some of the, where we feel that some of the sort of future exciting innovations are going to come from.
Perfect, thank you. So we're going to start at the very beginning here. What is success in fintech? We have a lot of unicorns. We have some very high valuations for companies that aren't necessarily even profitable. So what is success in our industry today?
Yes, well, without trying to get too heavy and philosophical on at the end of a week, it's an important question, and I think it's something that increasingly, and I don't, we don't want to dwell on the pandemic, but certainly the pandemic has accelerated the importance to ask this question. Success, from the fintech perspective, it's really about valuations at the moment. We map something like 11,000 fintech firms globally. So in pretty much every corner of the world, one can find an example of pure play fintech companies. Those are all private market firms. So results, sort of specific results on profitability, performance that are hard to come by. So the only kind of metric that we really have, therefore, is valuation. And certainly, given the state of the world and sort of venture capital markets and investor appetite for investing in innovation, valuation seems to be a kind of a happy metric. I think, however, that in the future we are, and when I say the future, I think the future these days could equally be a couple of months' time, as much as it could be further ahead. And as I say, the pandemic is accelerating this, and I think really what we're going to have to look at is a much more nuanced version of how one defines whether a company should be invested in, which is obviously what the valuation number is all about. We, for example, are about to kick off a global initiative looking at diversity of fintech firms, and we've done that starting by looking at how women are represented in the marketplace and at the very tops of these companies. And what's staggering is, coming back to this point of view of success, what's staggering is that sole women-founded companies attract just 1% of venture capital globally. And if we're saying that fintech is a digital enabler, it's really part of the digital infrastructure that's driving the future. What we're saying is now that if that's the scenario, where there are very few women founders, very few women at the tops of these companies, and of course, by default, women-led companies are attracting such a small proportion of the revenue, and we think that will be largely the same if we look at broader metrics of diversity as we build out our initiative. Then I think it's pretty clear that we have to start to redefine what success is, and then if one, of course, layers in the climate challenge. It's pretty obvious, really, that growth at any cost is no longer a viable strategy. And so success has to be about the ecosystem that we're in, the society we're a part of, and the impact of this stuff. What use is this is this serving, and how can we measure and score that impact?
Yeah, I feel like I also agree. There's something that doesn't quite ring true anymore about valuations as being the only metric of success. Yes, obviously it gets the headlines, but there's something now to answer to, isn't there, about giving back, doing good, truly solving problems that people want solved, that I think we need to think much more about in our space. So,
Yes,
you know,
absolutely.
in the new entrants that are coming into fintech, what are sort of the commonalities? What are things that you are seeing that they kind of all have as like a baseline?
Well, it's a pretty broad church, I would say. I mean, those that are sort of succeeding in the sense of being able to raise money, have tapped into that solution. There's no doubt about it. Any new entrant now, in most regions we're kind of past the get lucky phase. A possible exception of parts of Africa maybe, but in most cases we are in that kind of fintech firms that are solving a particular solution, and when they manage to latch on to that solution, they're then rapidly scaling into other verticals. So at the beginning of the very beginning, about a decade ago, the fintech story was all about monolines. It was all about unbundling. In the likes of TransferWise, for example, to give a kind of very scaled example, which has now become Wise, obviously, they were all about taking sort of one slice of revenue off the marketplace, off banks in particular, and then they tooled up. And I think that's really what we're seeing in lots of other places, which is identifying a solution, having the right mindset to scale it, and then adding on additional ancillary services that kind of meet or are relevant to the specific need of the audiences or customers they're serving. I think the big theme, and actually it's something that we've written about in a small piece that's coming out actually in conjunction with your guys at Mambu, is looking at this whole thing around embedding financial services into products and markets, and that's really I think that's certainly one of the harder things to get right. But for the fintech marketplace as a whole, it's a massive opportunity, and it's also potentially a kind of challenge in the sense of standalone fintech players are going to have to think quite carefully about their kind of partner ecosystem, marketplace, and market industry strategy, because increasingly an energy company is not just going to be about selling energy and having a financial services team that sends out invoices. It's really going to be about thinking, how do they take the payments directly? If they know what the customers are doing and how they're using their energy, might they be able to do other things for them? Might they help them optimize? And there may be additional services, ancillary services around that. And in fact, interestingly, we've just done a piece on Australia for the Australian Trade Development Agency, and we've been looking at some of the Australian innovations. And in that case, particularly around energy, funnily enough, local energy companies are working directly with banks, not fintechs, but with banks to kind of embed payments and financial services on sort of pay-as-you-go energy type pricing models. So I think those are the kind of the interesting things that are happening out there at the minute from some of the newer players.
Yeah, there's that famous quote that everybody's going to be a fintech company in the future, but it's about putting financial services where customers want them, wherever they might be. That's the most important thing. Give the customer, the end user, what they want when they want it.
Get out of the way, exactly.
Yeah. So some of these fintechs that are coming in, an important job that they have with their community, their partner community, but also the people that are going to use them, is trust. So the idea of trust in financial services is super important. How are they going to, in this day and age, build trust effectively and quickly?
Well, I mean, these are technology companies, so there's an important piece around how they ensure that and communicate that their technology is robust and secure enough. The fintech model that's rapidly evolving, or has evolved over the last decade actually, is one where the kind of blend between a buyer and a seller is no longer quite so distinct. This whole ecosystem model that sort of features so heavily in these kind of conversations. So a big part of it is one, thinking very carefully about the solution they're offering and the technological innovation, and exactly as you just said, Laurel, coming at it from the customer point of view. The customer's not interested in the technology. The customer is interested in how you can help them make their lives a bit easier, a bit simpler, save them some money, but do that in a robust, trustworthy manner. And then the other issue is how one is distributing to the market. Of course, a big a scaling fintech company, an early stage fintech company, is relatively hamstrung in terms of distribution channels. It will unless it suddenly raises an enormous amount of money, its budget to reach customers directly will be pretty limited. So once they've identified what the solution is, it's then really about working with that ecosystem, identifying the right partners, who they should be talking to, interacting with, that's going to help build that kind of affiliation, but also more importantly in the marketplace, that trust with both with the customer, but also with the potentially in the value chain, sort of the direct or the indirect sellers of their product or service.
Let's talk about that sticky topic, collaboration between the big incumbents and the fintechs. Is it a frenemies situation? Is it, it might have some pitfalls? What kinds of things should the fintech think about if they did want to partner up with the big bank, and vice versa?
Yeah. In principle, it should certainly be a kind of frenemies type world. The reality is obviously somewhat different, not least because of the scale of the companies that we're talking about. Yes, there are some pretty large fintech firms out there now, but they're a handful, and relative to the size of the average global bank, they're still small companies. They don't feature, if you stack them up against the S&P 500, you'd have to put together an awful lot of fintech firms to sort of get them in there. So the challenge really of scale is one. So I think a fintech company that wants to partner or work with directly a bank is going to have the mindset of being in it for the long game. If they're expecting a kind of quick turnaround at any level of decision, they're going to be sorely disappointed. So it does take an enormous amount of time. Every scaling, small, early stage, whatever you want to call them, fintech that we've ever come across or worked with has said that it's anywhere from a year onwards to kind of really get things motoring when it comes to working with a big bank. I think the other issue is that banks have certainly seen that they need to, and I think that culturally has changed over the last few years. And there's some really good examples of banks around the world that have taken a much more enlightened stance and understood that them trying to build their own proprietary solutions is not really a sensible or even viable strategy. They're much better to work with a partner that they could trust, that can innovate in a faster, more agile fashion. But at the same time, the pandemic has certainly had its impact there. And I think again we were talking to some people in the Australian and New Zealand ecosystems, where it's pretty clear that banks that have a sort of strong tradition in that region, particularly Australia, the big four banks in Australia have a very strong tradition of innovating and bringing innovations to their customers. There's certainly been a retrenchment and a more inward-looking focus since the pandemic. So I think any fintech now that's trying to engage with a bank, they've certainly got to come at it from a robust solution, a new problem that needs fixing. They can absolutely identify, have nailed, if you like, and then to think, well, okay, we need to have a long game strategy to make this make this a success and to make this a viable partnership. Bearing in mind, of course, there's a massive opportunity cost of doing that because yes, you might win a very valuable, lucrative, long-term partnership, but in the meantime, you've got to put a lot of time and effort into making that partnership materialize.
Yeah, I think the idea of the long game is super important for people to remember. If either side go into it thinking, oh, this is going to be a quick hit, I'm going to be fixing stuff right away, it's the wrong idea.
They're going to be sorely disappointed.
Is it still product first, growth second? Is that still the right strategy? Is the product the most important thing?
I would say it is, but I'm a product person. We're trying to build a product, and we think, we feel passionately about that product, and we want people to use it before we, try and splash around and do other things. Of course, it's a two-horse race when it comes to product and growth, not least because, if you go after venture capital, venture firms want to see or expect, pretty aggressive growth strategy. So that you can ideally fulfill the goals that you set yourself when you went through the venture round. So I personally think that you're better off financially. You're better off in the long term. It might not be as quick a result in focusing on the product, building it well, building it robustly, building that customer audience, followership, even. And partner networks, and then once you've got that product and that network, those networks in place, then to go hard on the growth. So the kind of hockey stick model, really, where sort of hold the growth down and then shoot off once you've got that going.
Yep, I agree. I always like to bring it back even further and say it's a great idea. That's what is at the start of any fantastic company. Is they truly solve a problem and they've had an amazing idea. Then they've got to build the product and have some good marketing, my interest, and do the successful growth. Okay, last question. Good. Fintech landscape predictions, next 5 years. What do you think's going to happen? And maybe touch on some geos a little bit, geographies that you think are, ripe for coming up and disruption.
Sure. Well, that's sort of geographically speaking, our 2021 rankings saw the birth of 50 new cities, 50 new ecosystems spread across the globe. In the main, the kind of fastest growing cities, were in the West or the advanced world. Choose your term. They tended to be sort of second and third tier cities. The big cities were all already there or thereabouts. I think the most interesting regions, are going to be the fast growth markets. There's no doubt about it, and there are still plenty of those. And that's really because fintech in the northern hemisphere is really about efficiencies, which is great and wonderful. It's good in the balance sheet and all the rest of it. Financial services, people love that kind of stuff. Accountants love that kind of stuff, but the way it's really exciting is in these sort of fast-growing regions, because that's where fintech makes stuff possible that simply wasn't possible to do before. So I really do think we're looking at the likes of parts of Asia. We're certainly looking at Africa. It's actually had a very good year from the fintech perspective this year. So obviously quite a lot better than last year. Although even having said that, even 2020 was also a pretty good year, all things considered, for fintech investment into that region. So yeah, I think we're really looking at the emerging world. From the diversity data that we've got, what's been absolutely fascinating is these two kind of global trends that we're seeing play out. Well, one global trend that we're seeing play out across ecosystems globally is the massive internationalization of fintech, not just ecosystems but companies. And by that we mean that an ecosystem in a sort of third tier city in Brazil could be a kind of viable challenger to somewhere in Western Europe. So I think we're really now looking at a marketplace that is genuinely globalizing, and at the level of the diversity data that we're seeing, fintech firms in fast-growing regions such as Asia, Middle East, and Africa are actually doing better on some metrics at having women-led and managed and founded firms. So, we're going to see, a rapidly evolving world, and I think if we can, going back to square the circle, if you like, back to what we were saying at the beginning, I think if we can match some of these great ideas and great solutions with an understanding that the world is changing and that we need to think about success in a more nuanced way, and beyond just straightforward valuations or financial metrics, then I think we're certainly in the next 5 years for a really exciting, but perhaps more on a more human level, a really important industry forming that kind of actually can shape or even reshape the digital economy.
Wonderful. So thank you. We're done. So thanks so much for joining us today, Simon. Really appreciate all the information and insights.
Cheers. Thanks, Laura. Great to see you guys. Thanks for having us.
And thank you, everyone out there, for joining us. Have a good time at the next session.